Hi everyone, let's go through my preferred bullish and bearish macro, high time frame, medium time frame, low time frame and micro scenarios, including potential trading setup. So the bullish scenario on the macro is that this is a 1, 2, 3, 4, 5, currently working on this wave 5 after wave 4 bounced perfectly on the 0.5 fib, taken from the low of 2 to the high of 3. Now what is also very nice about this bounce is the fact that this low of wave 4 was made exactly on the 0.618 fib time, taken from the low of 2 to the high of 3 right here on basically the 21st of November on the weekly chart, that is. And lastly, we also have a volume spike at the low. So not only is volume important, and there is high volume usually in a wave 3, but also there tends to be high volume at basically turnaround areas. So when we look at the COVID dump, for example, you can see a very high spike, which actually was higher than the wave 3 in this wave 1, as you can see. So we had a very high volume spike before a massive bull run to the upside. And over here with wave 4, we can so far see the same, where we also got a very high volume spike and we are now moving to the upside. Now potential targets then for this wave 5 is this area over here between basically the all-time high and $174,000 per Bitcoin, that is. And you can see I have a yellow target box and I have a white target box over here. The yellow is an alternative target, the white being my preferred target. The reason that the yellow one is my alternative target is because the yellow one over here consists of the 1 to 1 taken from the low of 1 to the high of 1 to then the low of 4, which is a common target for a wave 5. However, it is below the even more common target, which is the 1.236 and the 1.618 taken from the high of 3 to the low of wave 4. And that area is between basically 100k, 98k and 174k. So this is a very interesting area to me. The 0.618 that you see there as well inside this white target box is another target for wave 5 taken from the low of 1 to the high of 3 to then the low of wave 4. So as you can see, a couple of nice confluences Elliott Wave wise are inside this area as well, including the rare target, the 1.618 for a wave 5 with the pool of the low of 1, high of 1 and then the low of 4. So that is for me a more interesting area, basically again between 98k and 174k. If we then look at the more bearish scenario, the ranges or the range levels that you see on the chart are becoming more relevant. So currently then, this is the all-time high, the end of a wave 5, currently looking at a W, X, and then eventually wave Y. Now what is so important about the level that we are approaching right now is the potential target area for a wave X over here, because we have a very, very important support resistance area. It used to be support for so long, and now this can act as a very important resistance for a move to the downside. We also got a little bit of a weekly order block over here, which is the gray candle. We also have the high time frame range value area low that we didn't hit just yet, but also that is about 28.8k. So this level between 28.8k and 32, basically 33k, is very, very important for this scenario, where then one could enter potential shorts in this potential short setup to the downside to trade it for a wave Y, where a very more likely target is going to be backtesting this area over here in combination with the golden pocket between, like, let's say the 10 to 12k. I even have 9k over here as well, but we'll see how far it goes if it goes this deep. So this is at least a WXY. Within Y we expect a 3-wave structure. If we then go to the high time frame scenarios, which is the daily chart, the bullish scenario is the following, where from the all-time high to the downside we have a W, X, Y, X, Z. And there's two things that are important to know, at least in this structure, is that wave X did not hit its usually minimum target of the 0.382, which is taken from this X to this Y, and wave Z hit its rare target, but not the common target. Now nothing is wrong with that, of course. I mean, it is a rare target, so it is a target nonetheless. It's just important to know. And if we then look at the potential of this wave, what I'm looking for is this over here being a potential wave 1. I know some people have this as a 1, 2, 3, 4, 5, and then this being a wave 2. So then this basically being a 1, 2. So this one moving over here, this 2 moving over here, and that this is the beginning of a 1, 2, and then 3, 4, 5 in a bigger 3. That is also possible. However, looking at how short wave 2 is compared to wave 1, even shorter than the 0.382 fib time taken from the low of Z to the high of 1, I don't really like this. I prefer this to be a wave 4, but hey, price doesn't do what I like. Of course, it does what it does, but currently this would be a more preferred scenario in my book, that we are gonna touch this resistance area once again, support resistance flip. We have the high time frame range, value area low. It's very nice. And then eventually for a trading setup, which is of course risky because this is currently a bullish environment, but trading here with some short setups, or at least putting in some shorts around this area, stop loss somewhere above, better safe than sorry, trading it to the downside for wave 2, with then the most common targets in a wave 2 being between the 0.5 and the 786 fib. Most common target is still, out of all those, the golden pocket, which is the 618 and the 66. Then turning this around in a potential long setup to the upside, which can go all the way to the moon, because we will be lettering around this area, and then the sky is basically the limit. If we then look at, oh yeah, I have volume of impulse. For people that want to know, the volume of this impulse is, by the way, looking good. We have a 1, 2, most volume over here with the spike in this wave 3. Then during a wave 4, volume going down. And then if this is indeed the potential wave 5, then we can see volume over here is lower than in the wave 3. And that is what I like to see. So yeah, very nice. If we then go to the bearish scenario, again on the high time frame, we're looking for that WXY as mentioned on the macro. So then this being a WXY, with inside the X then looking at an expanded flat ABC structure, which in C is a 5-wave structure. Now if you look over here, wave 4 bounced perfectly on the 0.5 fib, taken from the low of 2 to the high of 3. Very nice in this trading setup as well, which actually by now reached its target, in my opinion, which is the low of the most common wave C target box over here, because the most common wave C target box sits between 27.8k and 34k in this C, which then is part of this bigger X. Now a couple of fibs over here that are very important to know. The fibs that you see here on the right side, the 1.236 and the 1.618, taken from the high of 3 to the low of 4, those are wave 5 target area. So this target area is the target area for a wave 5, for a normal wave 5, not an extended one, but a normal one. But because wave 3 is already extended, wave 5 tends to be normal and not all the way extended to the upside. So that is important to know, with the 1.618 sitting at 29.6k. Now, of course, I already showed you the most common wave C target box. So we hit the most common wave C target box inside this wave 5 target area as well. However, is it then finished? Well, finished and downside to come. Is wave 5 in? I'm not so sure, because preferably, in my opinion, we would hit at least the 29.6k area. And the reason has also to do with this wave X over here, with a minimum target usually of the 0.382 taken from the all-time high to the low of W, also sitting at 29.6k. So the 0.382 and the 1.618 target of wave 5 are both at exactly the same level, including we didn't yet touch the high time frame range, value area low, and we also haven't yet touched the support resistance area. So I would like to see a little bit more upside before eventually a move to the downside. If this scenario would play out, then the shorts can be laddered in this area over here, stop loss somewhere above. Make sure that this is still a rare wave C target. It would be very crazy if this wave 5 would go all the way up here, because then wave 5 has to be extended compared to this 3, unless this is a 1, 2, 3, 4, 5. So this is wave 1, then we have 2, and then this is going to be a 1, 2, 3. But still, for wave 1, if this is a wave 1, could it go all the way up here? Yes, but looking at the inner structure soon on the medium time frame and the low time frame, I would not expect price to go all the way up here. But a potential short setup, lettering over here, stop loss, and then trading it to the downside for wave Y. Currently a target is 12.8k. And once more, support resistance area over here. After the bull run to the upside, we never came back to this area. If we then look at the medium time frame count, we go to the 1 hour chart and we get a little bit more insight in the latest impulse that we had. So over here you see the setups that I had, and this then is in the bullish scenario the low of wave 2. So then we have a 1, 2 in this scenario, but as mentioned before, Wave 1 can also still be here, with wave 2 then eventually in the making, right? So then this is not a 5, but this is a 3, 4, and this is then 5, yellow 2, 3, just to make sure that you also remember that idea. But in this scenario, which is the more bullish scenario, let's say, even more bullish, this is then a wave 2 on the very high time frame. And then on the medium time frame, we're looking for this to be a 1, 2, 3, 4, 5. And what is interesting is if we look at the channel, so this could be the potential end of wave 5. I don't really like it on the lower time frames, which I will show you in a second, because it hit the top of the channel. And also this channel, by the way, taken from the high of 1 to the low of 2 to the low of 4, is the high of this channel is always a wave 5 target as well. So this potential wave 5 target in combination with this potential wave 5 target, the fibs over here taken from the high of 3 to the low of 4, including this potential wave 5 target, the 0.618 trend-based fib extension from the low of 1 to the high of 3 to the low of 4, makes this area a potential wave 5 target, right? So is this then wave 5? Well, I would prefer this to be the wave 5, but nonetheless, in this scenario on the medium time frame, we are looking for very short, some potential short setups. Once again, this is more risky because we are in a bullish environment, but leathering shorts in this target area for wave 5, stop loss somewhere above, and then trading it to the downside for a potential wave 2 over here. Most common target would be, again, the golden pocket, and then a wave 2 of a bigger 3. So on the very high time frame, this is then the low of wave 2, then this is 1, 2, and then a massive 3 to the upside has to be expected, with then a potential long setup, is longs entering around this area, stop loss below the 2, and then trading it, of course, all the way to the upside. So yeah, this is the bullish scenario on the medium time frame, with then the bearish scenario being that here we have again wave XC. So this is the end of then wave X, looking for a wave Y to the downside, with then over here wave 4, so again 1, 2, 3, 4, and then eventually looking for wave 5 to be finished soon. So therefore entries inside this area, stop loss somewhere above. And I just, again guys, if you trade for, I mean, no financial advice of course by any means, but better be safe than sorry with your stop losses. Most of the time very tight stop losses tend to get hit, and you get more losses than wins, and that is general knowledge in the markets. That's definitely not financial advice, but then at least stop loss somewhere above, because we still have the high time frame range value or low. We still have 29.6k as an interesting level as well for the end of a potential wave 5, the support resistance area. So yeah, stop loss, better safe than sorry, trading it all the way to the downside for a wave Y, which then goes even below the lows at 15.4k, which is the low that we made. If we then go to the low time frame scenario, we go to the 15-minute chart, and this is of course where, with the more recent case over here, things start to become interesting. So if we look at the low time frame scenario, what you're looking at the moment is the bullish scenario. I'm not sure honestly if this is my preferred scenario, because having another wave 4 over here is definitely stretching it, because in this case the green count is the 1, 2, 3, 4, 5, with the blue count being a 1, 2, 3, 4, and then 5 over there. It feels like I have to put it into place instead of it is into place. Like, yeah, I have to stretch the count in order to make it happen. Because if this is a 1, 2, and this is 3 over here, 3 is very extended. Usually the max target for a 3 is actually the 4.236, which is around here. So then this would be in green a 1, 2, 3, 4, 5, which you will see in the more bearish scenario. But hey, this is a bullish scenario. So in this scenario, this then is the high of a wave 3. The yellow fibs over here are the high time frame wave 5 target area. So then if this is over here, if this is a wave 3, this is wave 4, then wave 5 should end somewhere around these fibs as well. So I put the high target fibs for potential wave 5 on the chart as well. So we are currently inside this area, important. And then we are looking for a move to the downside in some corrective structure. And as you can see, the 382 and the 0.5, the most common targets for a wave 2, also have very nice confluence with this target box over here as well, which has a couple of volume areas, daily naked point of control, we have the time naked point of control, the range point of control of this range is here as well, so that makes it quite interesting. A potential long setup would then be to enter longs inside this target box, stop loss somewhere below the invalidation, usually if price and candles end below the 0.5 scenarios are invalidated, but again, better be safe than sorry, so always have a little bit of leeway in my opinion, and then trading it to the upside for then a wave 5. If we go to the bearish scenario, 1, 2, 3, 4, 5, 5 is basically in, and now we're looking for a downside. So in this scenario, wave 5 hit the even lower time frame, and we'll show you in a second the even lower time frame wave 5 target, as you can see. So if this is 3 and this is 4, take the Fibonacci from the high of 3 to the low of 4, toggle on these, the 1.236 and 1.618, and you can see the 1.618 has been hit perfectly for a potential top of this wave 5, with then a correction to the downside coming, or of course wave Y all the way to the downside. And then the even more low time frame micro counting. The lower you go in Elliott waves, the less, well, the more unpredictable it becomes. However, we then have wave 3 over here, wave 4, and then a 1, 2, 3, 4, 5 in this final wave 5. So wave 5 is then finished. And if this is going to be a corrective pattern, it's more bullish. So if we get an impulse to the downside, it's bearish. But if we get a corrective pattern, it's bullish. So in this case, looking for potentially, if we look at the volume as well, potentially a 5-wave move to the downside, with over here in this move to the downside a little bit of a volume spike as well. So that could be interesting in a potential 5-wave structure. So then a 5-wave structure over here in the A, followed by then a 3-wave structure in B, and another impulsive move in C. So we have an ABC zigzag in a bigger wave A, which then would be followed by a 3-wave structure in B to create an expanded flat ABC. So what I like about this is that we would now go to the downside and not hit the important resistance areas like the high time frame range value area low, support resistance 29.6k. We don't hit any of that. We're going to move to the downside first, then we hit it with a wave B expanded flat, and then a wave C of an expanded flat in an ABC tends to be very quick, like very impulsive. So that could be very nice to catch people out as well for potentially more upside, hitting the resistance area and then go down very quickly. Of course, another bullish scenario is, as kind of mentioned, this is not yet wave 5 and we still move to the upside. We'll see what happens there. The bearish scenario, however, is that if this is the high of wave 5, we're looking for an impulse to the downside with a 1, 2, 3, 4, 5, of course, with more lower prices to come in either the beginning of a very big impulse to the downside, because that is still the potential, or this is going to be a wave A followed by a B and C, which then is a corrective structure. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next video at 1 p.m. Central East European time for another Bitcoin update. Thanks for watching. Bye bye.